Good afternoon to everyone for Back Roads of Illinois podcast with Chris Robinson from Robinson Marketing out of downtown Chicago with TJM.
Good afternoon, Caesar. Nice to be here.
Good day. Chris, how are you for this afternoon after the markets close?
Pretty good. We're getting ready for tomorrow's USDA.
Can you explain to the audience about tomorrow's WASD report and June acreage report?
Yes. We just had a kind of surprising report 2 weeks ago, about a week and a half ago. The surprise was there were 4 million fewer acres of soybeans and 2 million extra acres of corn. So that really moved the expectations for the carryout, in other words, the supply for soybeans next year. And that's why we had such a big rally in soybeans rallying well over $1. We're sitting here, north of 13.50, waiting to see if we get a $14 print. So a very good rally for soybeans. Tomorrow at 11 o'clock, we'll get another update from USDA, and it's going to concentrate on yields. So there'll be yield expectations. Again, if there's anything that is surprising, you could see the market react. These USDA reports, they come out once a month, and they can move them they can move prices very, very quickly.
How are the grain market for today?
Well, we've got December corn and November beans. That's what we're looking at. December corn is back north of $5, thankfully. We did just have a pretty severe move, however. About 10 days ago, we were at 630. So we went from 630 to 485. We have recovered. Again, like I said, we're north of $5, but that big sell-off came on the last USDA report. So we'll see if we get a recovery higher. Pollination has gone well. We had cooler temperatures, and we still are in the middle of pollination for a lot of areas, but so far that has not been an issue. The market is anticipating hotter and drier temperatures in August, which is one reason soybeans have been higher lately. Yes. There is
the weather premium.
Absolutely. There is a weather premium for soybeans right now. Market is anticipating possibly that if it gets hot and dry in August, again, that's just, several weeks away, that could lower yields. And lower yields in an already tight supply situation would drive prices even higher. So that's what the market is focused on now. A month ago, they were focused on corn. Now they are going to be focusing on soybeans.
I will be asking you, what is your opinion on the soybean crush on NOPA on next month report?
Well, again, a lot depends on what happens with carryout, but if the supply remains tight, you should continue to see that crush bid strong. You've had a lot of movement in soybean oil as of late, soybean oil hit a 4-month high. Soybean meal has been whipsawing quite a bit. But yes, we'll see if the tightness in supply continues to support the crush. We have not had much Chinese demand. That's one thing that has been lacking. We'll see if the Chinese demand picks up.
How is the corn and beans in the Midwest?
You know, in Iowa, they've gotten timely rains. Parts of Indiana, I would say that we've recently got timely rains, which were much needed. So the corn, while we may have lower than expected yields, there's still plenty of time for that to recover. I think the market is more concerned about the next 6 weeks weather and how that will impact soybeans, especially in August when the pods fill. But for now, the market has certainly recovered, and that is one reason you saw the sharp drop from 5.50 corn down to back to $5 corn.
How is in
Wow,
the livestock market for our four legs friends?
Well, we continue to be in just a tremendous bull market for cattle, not only live cattle, fat cattle, but also feeder cattle. The tremendous bull market, making contract highs here, threatening to make new contract highs tomorrow. That's been a very, very strong market. The lean hog market has recovered quite a bit as well. Lean hogs started out the year with a disappointing about a $27 sell-off, and we have recovered a big chunk of that. So that has come back as well, thankfully for ranchers.
I saw the features on the feeds with Scott. I saw the features on the feeds with Scrub the Cow Guy.
Yes, Scott is a good friend of mine, an old friend of mine, and at one point we were actually partners. Yes, the feeders continue to move north, and we will see the overall market supply remains tight. The herd is not large enough to support the demand, so demand is pulling up prices.
Finally, what is your opinion for a couple of months for crop conditions?
It seems like the worst of the crop conditions are behind us. The market has recovered. Every Monday after the close, we get a crop condition report. Crop conditions improved across the board. So we'll see if that continues. Again, if the weather stays favorable, if we continue to get timely rains, the crop conditions should increase and should get better. However, as always, all it takes is 5 or 10 days of dryness and the crop conditions would change drastically. So the next 6 weeks are very, very important for the weather.
Thanks, Chris. Is there anything the specifics on the market would you like to go to be telling the audience about that?
Well, I would say that we still have great prices in soybeans. Anything in soybeans north of 13.20 is in the upper third of available prices for this year. So you still have good prices there. We were just $2 lower on May 31st. So do not walk away from that $2 worth of revenue. As for corn, I would suggest that, you know, don't be lulled into complacency. We are at $5. You still want to protect, 480 or 475 corn if able, with a put or some sort of a hedge, because no one wants to be looking at 430 corn at harvest, without having some hedges. So I would say this is the time of year to play defense, keep your upside open, and we'll see if we can get a nice rally in corn. So hopefully soybeans can pull corn back up.
This Chris Robinson from Robinson Marketing and the part of TJM in Chicago. You've been listening to Back Roads of Illinois. I am Cesar Delgado. Have a fantastic day.
Thank you, Cesar. Have a great day.
Thanks for coming.
Anytime, Cesar. Thank you.
You're welcome.
Bye-bye. Bye-bye.
No.